Okay, it looks like we are live on on YouTube. Hold on one second as we start and tell everyone to come in here. Today we're going to be talking about Kevin Warsh and what it means for asset prices. Okay. Yes, sir. Okay. Oop. All right. So what I want to talk about is Kevin Warsh and what it means for asset prices. We are live. That is good. A little bit of a hiccup setting up ODS. I'm going to make sure. Everyone sees it. Okay, so Kevin Warsh is the ultimate elitist. I think what people don't understand is that he can simultaneously say smart things and not be smart, and the reason is that he is regurgitating what he's heard at dinner tables. I have taken down my longs, I've added shorts. You know, this market is kind of chopping and looks really bad to me. You know, not like straight down bleed, but it looks like we could get there. Volume is super low. Okay, thank you. Let me turn that up. How's that? Better? Testing, testing. How is that? Okay, perfect. Is it too loud now? Let me know. Kevin Warsh says some things that sound pretty smart. Welcome in, everyone. He didn't come up with those ideas. What the Fed chair takes is someone with agility, and Warsh has a terrible record of responding to crisis. That is not good. That is not good because a lot of this market is propped up on the belief that the Fed will step in if there's any disaster. That's why people don't hedge that much. That's why you can never really get too bearish because Jerome Powell will just take the bazooka and blow you out of your short positions if you decided to be short. Warsh is a guy that in 2009, with approaching 10% unemployment, he was saying that we needed to worry about inflation. Now you might say, okay, well, listen, I don't get that because he seems like a dove right now. And you would be right not to get that if you are missing one thing. And that one thing is that he does as he's told. He listens to smart people and, takes those ideas. But those wise guys, that smart money, can be pretty significantly wrong, especially when it comes to public perception and markets. You saw how wrong all of those same voices were on whether Trump would be elected or not, both times. Well, I think that the way that this is going to develop is really bad for the sort of Druckenmiller type, but it really expands past Druckenmiller. I was saying, before, I have a tremendous amount of respect for Druckenmiller. I think he's dead wrong here, and I think it's going to end up hurting him a lot. It's the sort of thing where it's like you think you get your guy in, it's going to benefit you, except your guy is tied to you, and if your guy is going to fail, people are going to blame you. Um, Listen, as far as it goes with um, Fed chairman, you got to look back. The question in the chat, if you're seeing this later, is he's got to debate. He's got to propose his views. First of all, Warsh is a convincing, you know, regurgitator of arguments. It's not just because he doesn't make up the argument doesn't mean it's like he has a speechwriter. So I think he will convincingly say his point of view. And then you have to look back and try to figure out what was the last time that the Fed chair voted on something and the committee's decision was the opposite. I mean, we rarely have a dissent. That is a group thinking organization. And Warsh is going to go in there and he's going to make convincing arguments. And one of those convincing arguments during a time of crisis might be that we don't want to overreact here. We don't want to do quantitative easing. He's big against quantitative easing. I am too. But the problem is that you have to do, when you're making a radical change to Fed policy, first of all, even if you do it perfectly, the market's probably going to freak out. Second of all, I do not think he's intelligent enough to do it personally. And then what I'm worried about is that because he's not intelligent enough, because he's such a groveler to elitist interests, that he is going to give away so much insider information and it's going to be apparent, just like the market kind of turned on Bill Ackman. I think this is going to be like times 2 or 3. And you are going to see a fragmented political scene. Politics aside, let's talk about how this affects asset prices. If you do not have a Fed backstop, you're not confident in the Fed bazooka, he's not going to add Bitcoin to the balance sheet because he's decreasing the balance sheet. He's not going to do quantitative easing, so gold and silver going up is, not that bad. I see some narratives out in the media today that are like, gold and silver are down because the Warsh pick is positive for Fed independence. What are you talking about? Gold is down because the Fed balance sheet's going to go down. All assets are down because the Fed balance sheet's going to go down, besides Tesla, because Tesla does whatever it pleases. Okay? Tesla's just doing its own thing. But the only thing I'm bullish on right now is the US dollar. Okay? I'm not bullish on a single asset. I'm not even bullish bonds because it would make sense that bonds would go up, but not if the Fed's selling bonds. So we have an issue. Light and Coherent were up a lot. Okay, I shorted Lumentum at 445 this morning to take some optics exposure off because I don't want to sell Coherent. Okay, it's down over 10% from when I got my fill. I bought puts for February 2nd and February 3rd. I bought puts for today, although definitely lighter. And I think over the weekend, the market's going to digest this and be like, wait a minute. This guy's a wishy-washy, confusing track record. We don't really know what he's going to do. He's going to cut rates. I don't even know if we really like that. And then what? This guy has a track record of not responding to crisis. That's not good. We don't have a real backstop anymore. He wants to lower the balance sheet? Uh-oh, how? Do we trust him to lower the balance sheet smoothly? Oh no. Then we're gonna be asking, does he have the ability to predict inflation well? When he was a Fed governor, no. So you have an equation where this guy's a smooth talker, he's good hair, all of that, and there's too much confusion and complacency around this story. What kind of problem occurs? Well, one, I think generally all economists are in the same academic circles. They're always on the same side of the boat, and they're always supportive of an institution that is fundamentally broken. Having said that, I do not think Warsh listens to academics. I think he listens to the people that he plays golf with in the Hamptons and the people he goes to cocktail parties with in the Hamptons. Well, listen, he's kind of like, for me, he is of a Fed chairman, he is Gavin Newsom. And I don't like it. I don't like it at all. If you look at the technicals, like as we're looking at the QQQs, like you can see how we could go below 600. You see that chop, like realistically, you know, which direction is it going to go? Because it's so confused. The market's so confused right now. I'm not buying anything. You know, like, did I sell out of all my longs? No. Did I sell coherent? Slightly. Did I sell AMD? No. Did I sell PER? Yes. But I didn't sell out of all my longs. I'm not like, completely degrossed, but I am net short on an SPX delta basis. I think pickup protection is the smartest move. It's pretty cheap right now. I think the VIX is going to go up. We got a VIX right now. I think I just pulled up the index. That's why it's not updating. Let me look at the VIX. Actually, I'll do it on here so you guys can see. Let's look at the VIX. Volatility index, okay, here we go. It looks like, volatility has been sort of building for a while. A lot of uncertainty, but if you look out on it, you can see the upside to the VIX. Obviously, this was, a little bit insane. If we get here, that's going to be a good buying opportunity, because ultimately, if you backtest this to the S&P, it was an amazing time to buy, when the VIX gets really high. But you can see how much upside the VIX could have, right? Like twice we've flirted with 30 or so. And typically, like, maybe that's the first buy point. Above 50, it's like certainly a buy. Above 40 or 50, it's certainly a buy. Right now we're at 18.3, despite nearly having an Iran, a potential Iran war, a potential government shutdown. All of the uncertainty that we have, the uncertainty index is lethargic. Now, I did buy some VIX calls. I think that might be an interesting idea. However, I want the downside vol. I don't if the market goes up and is just super uncertain, people are buying puts and calls in each way, but also going into the market with shares, it's less likely to happen. But I'm not trying to make money for that outcome. I'm trying to make cover my left tail risk, right? I'm trying to cover the risk that I see that the people start freaking out. Listen, I shorted silver. I thought it was very toppy and overbought, and I covered way too soon. I don't think just because it's down 25% it's a buying opportunity. I think there's going to be a tremendous amount of shaking out to do, and those metals are going to act like crypto, and it's going to give you liquidations and more liquidations and more liquidations. Now, could that liquidations, be back from $100 again? Potentially. It's not something that I want to get into. I think long term, it's good to have a moderate amount of silver exposure. But what people are doing right now in retail is they're being euphoric, not understanding much, and they're just buying 20% of their net worth is in precious metals, and we are closer to the top than the bottom in precious metals. If you want to play that, I would play a miner, because we are way above the cost to mine, and more supply is going to come online because there's a lot of profit in mining right now. Yeah, I think yields are up because honestly, if I would say yields are up because we don't have a guy that's going to buy corporate bonds during a crisis. So yes. The high yield, I'd be interested on HYG. I'm going to pull up HYG on. I'll do it in front of you guys. How about that? It's doing fine. Oh, come on, TradingView. Why do you do this to me? Yeah, realistically, that's not that bad. So we're not worried about credit problems. What we are worried about here is, basically the Fed backstop and, just, being the buyer of almost first resort during a crisis. That narrative's completely broken. We're so used to Jerome Powell coming to save the day. The Powell put, every time that there's a problem in the repo markets, every time there's a problem in generally the economy, whatever, this guy is not going to be agile and make moves. Having said that, he might be agile on the repo side, because what do hedge funds do? What do the Saudis do? What does the Qataris do? They use the repo market to lever up 50x and invest in hedge funds that are also probably taking gross 2 to 3x exposure, and then also probably levering up to squeeze a couple nickels out of the repo market. That's why the repo market blows up so much. It is a significant problem. I see a tremendous amount of black swan risk. Now, because I'm identifying it, it's probably not a black swan, but I realistically think that a lot of things could break right now. You saw it. You saw it in silver. Okay, what kind of funds are long silver or gold right now? What else are they selling? How is this cascading effect? How does the narrative going to change over the next few days, coming weeks? I don't know. The only thing that I see, distracting us from this quagmire, as I put it on Twitter, is earnings. He cannot get voted in, but the thing is, Democrats and Republicans are going to vote for him because their donors want him to. Okay? But I think the donors might flip on Warsh. I don't think they're going to stop liking him, but they might be a little sketched out about how the second order and third order effects of this are going to be. It's a little troubling. This is a guy. You got to understand what I'm saying here. Do not take it out of context. But he's married to one of the richest Jewish women, a trust fund baby in the world. She is a socialite. I'm sure she's a very nice person. I've actually heard good things about her. Her dad is the head of the, national, global Jewish conference or something. He's, as big of a, as big and powerful as of a Jew as you can get, pretty much. Now, that's not inherently bad. That's not what I'm saying. But what I am saying is we live in reality. And the way that this is going to go, in my view, is very poor, because the politically and otherwise, because the types of people that do not understand complex systems in place, and the fact that elites are not just Jewish people, that is going to be the cop out. And I really don't like it for that aspect. And then, if you expand it and are a little bit more intelligent, you're going to blame the elites broadly. Okay? I think that there's some validity to that. I think that the elite should not have control of the Fed, but they always have. I think this is going to go very poorly for the Hampton circuit. Everyone trying to get close to Warsh now, has been building him up and doing favors, assuming he'll do a favor for him. It's like, okay, Bill Ackman, you are in the spotlight again, and you are now an insider because you played golf, at a charity event with Warsh. And Druckenmiller, a guy, he comes out a little bit, he says what he thinks, is the correct thing to say at the time, but people are going to start blaming him if this doesn't go well. So generally, that's the political side of things. The way that I see this affecting asset prices really strictly is just, we don't have a Fed backstop now anymore. The Fed balance sheet's going down, which has driven up asset prices greatly. And in combination, we have a problem because, well, we don't really have a guy that is smart enough and agile enough, a markets guy like Rick Reeder, to unwind some of the things that Powell has built up. It's not going to happen soon. Like, he doesn't get into office until May. He is 100% going to be tested in May. And the bond vigilantes are going to come out, and everything's going to be scrutinized that he says in the hearings and otherwise. And I just don't think, with adequate questioning and changing dynamics where he has to think on his feet, he's going to be the guy to lead this, $32 trillion economy, basically. And I think the Federal Reserve is way too massive. I agree with him on some things. I think the balance sheet's too big. I do not think he's smart enough to tackle a massive problem. So let's look at SLV. How about that? Holy broken. We have to go back to the beginning of the year. That is really broken. All right, just so we know, something like this happens on any bounce. There's going to be people taking profit. Some of these people might be in the green still here, or they might be cutting their losses because they bought here. They get a bounce and they're like, oh, happy. This is really not a good dynamic. Now, could you trade it because it's oversold and this is a liquidation event? I'm sure, but just so you know, the silver bull market is severely damaged. I no promises on anything. I could flip long in 25 minutes, you know. But I'm really particularly, I see a window between now and next Wednesday, especially over the weekend where people start digesting this more, that it could get really ugly. And we'll see, and I'll read, and I'll be like, okay, this is going, how I anticipated, or it's not. And that could continue through earnings, no matter what earnings are. And really, realistically, like, we've got to see that. Now, gold went up to what, 5,500? What was the real price of gold? And it's down $1,000. Holy moly! That is hideous. That is hideous, ladies and gentlemen. So, just because something is cheaper than it was, these are commodities. There's no earnings. Okay? Commodities trade on technicals. That is a technically broken chart. Now, if it holds here, it chops around for a little bit, maybe you can be constructive and the market would start to wipe it off. But as of now, you just saw this thing flip. And again, it goes back up to 5,000. You're going to see profit taking. And also, people have jewelry, and their jewelry is more expensive. They might melt it down. Silver is less of that equation. But I think generally asset prices have issues right now. Qs are bouncing a little bit, but I haven't covered a lick. And if my hedges all go to zero, ideally the market's up, because I don't want my hedges to go to zero and the market be flat. That is the downside of puts. But again, because if the market just rips here and people just got short and they're kind of like getting blown out and bulls win, which I was a day ago, that might give another even better put buying opportunity with more complacency. But if it just stays flat, then you're kind of bummed if you buy puts, because it's the same price and you lost money. You feel? Yeah, you're double short silver. It's up what, 40%? Buyers are stepping in here. Dude, I hate that woman more than anything. Shut up, Elizabeth Warren. She is actually the worst. Yeah, buyers are stepping in here on decent volume. Um, let's go back. Let's zoom in. Show you what I'm looking at. Okay. You don't see it on TradingView, but I do see it on Interactive Brokers. Yeah, that's about right. You know, obviously a lot of volume in the morning, but we'll see. If this rolls lower, we could see a close at like 618 or below. What is volume right now? I imagine it's quite high. Oh, that's not the right keyboard. Mm. All right, volume on Qs at least is like pretty subdued. That's interesting. Let's look at this on a more 1 minute basis. There you see what I'm talking about. Volume stepped up in here and tried to sell it off and volume picking. So I'm still going to stay hedged because, you know, if I didn't have a bearish bias, I would probably look to get long here. In fact, I may get calls just to CYA. We'll see. I just want to buy volatility here. Right? Like the other way to do it is to buy the VIX. You could go out, you know, a month and buy calls and puts, just do a straddle and just be playing, you know, pure Vega pretty much, or a move in either direction. I think the VIX at 18 or 19 is just like way too low. Let me see something. This OBS I'm not really so used to. Only 23 views in here, so I didn't promote this very much, but yeah, I'm gonna buy some calls. Buy some calls. Let the bulls die if they want to take this higher. Let them lose their energy. If they want to take this higher, by all means, I will probably get more puts. Considering the volume's kind of it's not. The volume's not big here, right? Like you see like a little gather, it looks like it wants to go higher, but I see 2 minute candles where there's not a lot of volume that's saying, so I'm going to skip the calls, I think. In fact, I might add a put. Add a couple maybe 0-day puts. Let's see how we're doing, gentlemen. I'm short meta, I'm short light. Those are working quite well for me today. The reason why I shorted meta bigger had less to do with Warsh. Let's see how that volume takes that. Had less to do with Warsh and more to do with SanDisk, because I figured, well, there's another stock for people to buy, so meta should sell off a little bit, and it did. From 740 or whatever, 740 something. I think if to take risk on, where I'm going to be looking for risk, let's say it that way, is going to be in China. There's a lot of developments happening in China, and I think investors are going to. Okay, that is a decent amount of volume. Let's see. But again, like here's the thing. This is kind of a proving ground here. I would say about 526 is the upside. 623 here. The calls right now, dip buyers are conditioned, right? Like even yesterday on Substack, I was saying like, buy the dip, buy the dip. A lot of people do not have the agility to be like, okay, but has something fundamentally changed here? So the dip buyers are trained. The dip buyers are trained. The question is, do institutions, does smart money that is not, necessarily super, bulled up on Warsh because they know the guy well, do they start de-risking here? That is, pretty much the ultimate question to me. Let me check IBET. Yeah, because like what the competing narrative, like there's going to be a group of people sitting there with a lot of money, funds or otherwise, saying no, Warsh actually said some positive things. He's flipped his tune on Bitcoin, and it's like, okay, but you think he's going to add it to the balance sheet? Really, you think he's going to decrease the balance sheet and just convert it to Bitcoin at the same time? Bitcoin's up a lot, yeah, in the past 30 minutes. I don't think so. I'm going to buy some Bitcoin puts for over the weekend at some point. All right, gentlemen, you can still get not commented. Trump can also pull it. But in reality, it's not looking good. It's not looking good. It's not looking good. So that's the end of this live stream. I will get better at it, and we'll have emergency live streams on here, and we'll also have some scheduled ones. I appreciate you guys from coming. If you're watching this in hindsight, I'm sorry about the start of it, which was not great. Alrighty. Appreciate y'all.